Hi traders, this is Brad Gilbert with the Market Insight for the 30th of May. Now, just having a look at the US dollar and just see what key things are going on at the moment. Now, as I went through the last couple of days, there are a number of geopolitical events impacting the market, and you can see the major equity markets up here. It's a sea of red. Now, there's a lot of concern around the Italians potentially down the track pulling out of the EU. The whole political environment there is getting very sour, so snap elections do seem probable, and it's going to be an anti-establishment election, right? It'll be basically stay in euro or not. It's that sort of election. It's going to be more of a referendum than anything else, and the equity markets are a little bit terrified of the whole situation. It's reminiscent of the bit of the global financial crisis going back a number of years ago. But what we are seeing is how the US dollar is continuing to sort of march higher. Now, that's more so on the back of euro and sterling coming off, which are the two major components of the basket for the dollar index. And if anything, we've got a little short-term support line here coming in on the euro. I mean, on the dollar index around 94.55. Just keep an eye on that as we go forward. It's it's pretty fickle, but and the real big support line is back here at 94, sort of the figure 03. That's where we are with the dollar index. Now, just looking at the bonds, you can see the green arrow here where it's sort of touched up around just under 312. The US 10-year bonds, Treasury bonds, they're now down around 278 or 279. So, the bond market's getting a little bit hammered there as well. So basically, the dollar is sort of free to move about at this point. Strong fundamentals, the geopolitical situations that we've been sort of talking about with regards Trump, North Korea, Russia, Saudis, and also all the oil talk, lots of stuff, is still simmering in the background. And if you have a look at the major currency pairs, we'll start to get a bit of an idea of what that impact is actually having on these major currencies. So just coming back to the Aussie and Kiwi now, they're talking about risk off with all those equity markets getting hit. It's surprising, though, that the Aussie and Kiwi have been trading sideways. They're just starting to dip a little bit lower here at the moment. And you'd think they would play a little bit of catch-up with euro, which is obviously feeling the brunt of the pressure, sort of swinging around one sort of 15.50, sort of like a bit of a pivot line here at the moment. It's a bit of a support line going back some time. It's still sort of holding there. You'd think that's going to remain under pressure. Sterling, just following suit. We did have another touch here of this trend line yesterday, and it's still now trading sideways. But the market is starting to gear up towards some tangible economic data. One thing also here, you can see, I think we've got a great trade coming up here on dollar CAD. Now, as I said, oil is a major focus at the moment. And what we're seeing is this trend line here is holding. No one is really willing to push the boundaries, right, of dollar CAD just at the moment. Oil is trading sideways, as you can see by that green bar. And also we've got the Bank of Canada coming up later today. So that's going to be the major key going forward. But if oil rallies, this thing's going to be a great break trade back down through 130 the figure. And last but not least, if I just come up to dollar yen, now they're calling it a big flight to safety with the Italian bonds getting hit and all this sort of ruckus. It hasn't come a long way. Okay, this is not a substantial, to me, not a substantial move in dollar yen. I mean, it has come down 100 points over the last 2 or 3 days, but that's not huge, and it's it's still banging away here, 108.40. So yeah, dollar yen pressure on the downside, but it's not huge. Sterling, Brexit issues, Italian issues for the euro. Aussie and Kiwi following suit, but not really playing the game too much. And dollar CAD now just trading sideways with oil. That's the framework for the majors. Right, now let's just come and have a look at the. Actually, we'll just come back to the. I just want to highlight here too on the MyFX Trading Hub page. You'll see up here, up the top here. Okay, it gives you a bit of a picture. You can see the sea of red there on the global equity markets. And coming into the Asian session itself, you're going to be focusing very closely on the Nikkei. And the good thing is we do have Kuroda speaking later today. Now, he's not going to really be looking to upset the apple cart, but he could come out with something a little bit random. It would not be, well, it's very much like the Bank of Japan to jump on the back of, a bit of chaos to get their point across. But I think at this stage, with the yen rallying, it really doesn't suit their cause. The major focus will be the US prelim GDP, sometimes called the second estimate. It's the second GDP number, the flash GDP being the first, and then obviously the Bank of Canada interest rate decision is the key event. Now, if I just come back, I just want to have a look here because there's a couple of things. This is where you need to really track what is coming out because there's a number of things here that could impact. One area, okay, look, just going into trading in the Asian session today, we're going to be looking at the obviously the retail sales and building approvals out of Australia. Those Japanese retail sales figures, with dollar yen moving substantially, could come into play. But we do need a significant amount of variance. The number is pretty much usually spot on, but just let's keep an eye on that. But one thing that I was going to talk about is, okay, see all these European numbers. Now, they're not huge, right? But they do add up to be quite a lot of data. Euro is the major focus. We've got negative downside sentiment. What we can see is, especially with the German retail sales figures, sorry, we've got some import prices figures there. Yeah, out of Germany. Then we've got some numbers out of Spain, unemployment figures out of Germany as well. Then you've got some sentiment numbers coming out of the Eurozone, followed by the prelim CPI numbers out of Germany. So there's a whole bunch of stuff here that usually you would bypass, but just keep an eye on these numbers. They are sort of, I'd say second tier, maybe even third tier, some of them, but put them all together in this environment where the euro is under pressure, we may see a significant move on the euro. And what we're looking for is momentum. Right? We're looking for a shift in momentum so we can actually jump on it. At the moment, it's just drifting on geopolitical mumbo jumbo. So we're looking for that political edge to really give us some footing to get onto these things. Otherwise, we're looking back towards, if I just get that pen up, looking down towards the key numbers, right? The second estimate, okay, this is the prelim number. As I said, it's the second GDP number. You want to keep an eye on that for the US dollar. And obviously the Bank of Canada rate decision, that's going to be the major event. Now, no change in rates expected for the Bank of Canada. So it's really going to come down to the statement. And everything I've read and seen over the last month or two, we still have NAFTA hanging in the balance. So that's probably going to keep most traders, you know, or the Bank of Canada, I should say, very cautious about what's going on, especially with the fluctuations in oil. Now, there's one other thing too. So let me just change screens here again. That I've been sort of noticing a lot of traders have sort of getting concerned. They haven't been sort of maximising the opportunities here on a lot of this crisis, and especially when the yen comes into play, right? So just looking at the yen crosses now, if you have missed a lot of the yen cross action, and I saw Chris the other day had a really nice trade there on Kiwi yen down through the cloud. It was the last one to break the cloud. Okay, that was a nice trade. Now, you can identify that opportunity. If it's the last currency pair, yen cross to break, it's probably going to go with the rest of them, which it has. Now, if you haven't got on these trends, don't worry so much. These are all shaping up to be looking extremely gorgeous. See these downtrends. If you haven't got on these at the moment, it's probably too late, okay? And you can beat yourself up, think, oh, well, I've missed everything. No. There's going to be better trading opportunities to come, and it's going to be more around getting the move back up. And if I just come back to that, I mean, we're going to have levels here, either on the cloud or on the trend lines with all of these yen crosses. So get these on your radar and keep checking these every day, because as soon as that yen turns around, these things are all going to skyrocket. And this is very common, right? So you want to be able to set yourself up, jump on all these corrections of those yen crosses. I think that's where a lot of the cash is going to be. So if you're patient, stick around, wait for the major economic numbers, check out the euro, see how that's playing out, and just wait for the worm to turn, because when it does, those yen crosses will come into play significantly. All right, so there's not much else to do. I know this can be a little bit frustrating to start the week. We did have a UK and US holiday on Monday. It always sort of slows the momentum down, but we are starting to see a couple of things come into play. Yeah, euro, it's a pretty tough trade getting short down here around 115.30. Sterling, I'll tell you what, I mean, you can kick yourself. Hindsight's a great thing. You're probably going to be looking to get short sterling back towards 133. As I said, dollar CAD, this is very much on my radar. Now, the way the talk is on the media, they are talking about increasing production of oil, but at the moment, oil is sort of stagnant, going sideways. If that doesn't eventuate and oil rallies, okay, it's going to push dollar CAD back down, and that's where the play is. But we want to get through the Bank of Canada first before we jump on that trade. And dollar yen, as you can see, just going about its merry way. So that the only thing you need to be doing at this point is just going into your trend lines and start tuning them up. Okay, look for these new levels. Now, this level here, it's broken down through, it's gone. So there's not much to do on your trend lines. The Aussie and Kiwi, I believe those trend lines where they are, the support ones that have been broken, they will act as resistance throughout the next 24 hours. Pretty much the same as that Euro sort of pivot line now around 115.50. All right, guys, that's pretty much it. That's a wrap for me. There's plenty going on. You'll find the tune up to these market insights, obviously on the MyFX Trading Hub page. And yeah, just keep an eye on the major data releases that are coming out, especially the funded traders. These are the numbers that you need to be square for. And we've got plenty of action coming out. Even after today, it hots up, right? We've got a lot of Chinese, Aussie, Kiwi, then the Euro flash estimate, CAD GDP, and also the US non-farm payroll. So plenty coming out for the rest of the week. Take it easy, tune up your charts, and get ready to trade. All right, guys, have a good one. We'll see you in the trade zone. Cheerio.